Today I want to share with you some really amazing products that are on the market. We are in 2023. There are investors out there that are starting to see a lot of opportunity. Yes, the rates are a little bit higher than what they've been for the last several years, but one of the benefits in rates being higher is that a lot of buyers back out of the market. There's less people active in the real estate market, which then lends a lot of opportunity to investors. So this video is for real estate investors and realtors or management companies that represent investors. So let's get right into it. First, I want to share with you that there are tons of products out there for investors. I'm going to group together in this video the most popular, in my opinion, at this particular moment. Please be clear that products and interest rates are all subject to change, all based on the environment of what's happening. But generally speaking, these products have been around for a while, and you have the opportunity to jump on them. I first want to start with letting you know that most investor products do not require tax returns. Now, if you can use your tax returns, meaning that according to the IRS, your net income will support all of your debt and your new debt, that's always going to be your best option with the lowest rate. The downside of that product is by going institutional the normal way, there can be a lot of red tape, etc. But working with the right lender or broker can put you in a position to have more of a peaceful experience, and that's what I personally harp on. So the products that are out there right now, I'll share a few with you. One is called the bank statement loan. The bank statement loan is a product where the income is determined by the amount of deposits that you put in your bank account over 12 or 24 months. The main difference of 12 or 24 months is which block of months is going to give you the highest amount of average deposits. If you had a bad year 2 years ago and a better year 1 year ago, then we use the last 12 months. On the opposite side of the coin, if 2 years ago was better than last year, that's going to help your average. We take that as a calculation and we use that to determine your debt to income ratio. So bank statements instead of using tax returns. That's helping a lot of folks who are self-employed, especially investors. Another very popular product is called the DSCR loan, which stands for Debt Service Coverage Ratio. And what this means is that the loan is based off of the rental income of the property or the market value rental income of the property. If you're buying a rental property, you'll get what's called a rent roll appraisal. The appraisal report will determine what the expected or reasonable 12-month rental will be. And then as long as your mortgage obligation, taxes, insurance, principal, interest is about the same or less, then it's covering the rental income is covering the obligation, and that's how you qualify. This can be done on both refinance and purchasing. It's an amazing product for investors. Interest rates are based on the equity position, credit score, etc. But this is a very popular product amongst investors. I highly recommend it if it's feasible for you. Another great product in the market is an asset depletion mortgage, meaning that your liquidity can help you get a mortgage. Ultimately, your liquidity total is broken down into an average of months. I don't want to quote months because it depends on when you're seeing this and what the market is bearing. But if you have enough in liquidity, it's divided by a certain amount of months, which then gives you a certain amount of income, and that's how we calculate the debt to income ratio to qualify for a mortgage. This is ideal for folks who are not necessarily bringing in a consistent income, but they have a ton of cash in investments, the stock market, etc. You then have private lending, which are smaller institutions that usually require very little documentation. All they do is investment properties only. This is one of my favorites because the rates tend to be very favorable, very little documentation. Really the only caveat is the equity position and that the property needs to be in an LLC or a corporation. Another great thing about private lending and hard money lending is the speed of which these loans can get done. There's also fix and flip opportunities where you can actually buy a property, get money to renovate, and then sell it without a prepayment penalty. Same thing applies for a fix and hold. You find a property, you need to get in, you need the cash, you hold on to it for up to a year. Typically there's no prepayment penalty, so you can get right out of it into a longer term, lower interest rate product. That's just a small snapshot of the products. A lot of what I shared with you, you can actually do for primary and second home as well. This particular video is targeted for investors, realtors who work with investors, and management companies that work with investors. Okay, so we're doing a little pivot here. So I wanted to make sure that I added this part of the video to ensure that not only are we recapping the products that we just spoke about in the video, but we're also adding some products that were not mentioned in the video that I feel are very important that you and the people you know about for 2023. So let's get right into it. Now, these products, everything I'm mentioning right now, tax returns are not needed. So let's get right into it. Now, these are for both purchase and refinance. So first, the most popular one specifically for real estate investors is the DSCR mortgage product. So this product, to recap, is either for residential or commercial. Commercial is essentially anything that's 5 units of residential or more, or anything that's not residential that's considered real estate. And so this product is based off of the current rental income, if it's already a rental, or if it's a purchase, it's based off of the expected 12-month rental income. Now, I know a lot of investors are buying real estate for the short-term rentals, and there are some cases where short-term rental income can be used. Essentially, if in some cases, again, these guidelines can be updated, but if you can evidence 12 months and certainly 24 months of short-term rentals, we can use that as rental income on a refinance. But on a purchase, we have to use what the expected 12-month market value rental will be. Once we know what that rental income is, as long as the mortgage obligation on the new mortgage with taxes and insurance and any extra HOA fees or condo fees or whatever the case is the same or less than the rental income, then you should be able to qualify for this mortgage. It's great for purchase, refinance, cash out refinance. Some investors are on balloons where you have to do something instead of selling it. This becomes a really, really good opportunity. The bank statement loan. So the bank statement loan is designed for anyone who is self-employed and cannot use their tax return. So I'll stop with the phrase, you don't need tax returns, because every product on here is based on not needing tax returns. So the bank statement loan, we're averaging 12 to 24 months of either business or personal deposits in the bank account, and we're using that as the calculation to calculate income. This is designed for anyone who's self-employed, and we can use this for a primary residence, a second home or vacation home, as well as an investment property. Next product is the asset depletion loan. Essentially, what we're doing is we're taking all of your stocks, bonds, mutual funds, anything in retirement, 401k, IRA, anything that you can cash out in theory and get the cash pretty much immediately. And we're using that total lump sum, we're dividing it by a certain amount of months, and the result of that division we'll use as the calculation for income to qualify for a mortgage. Depending on what time of year, what products are out on the market will determine how many months get calculated. But this is for someone who's just not bringing in monthly income, but there's a lot of liquidity. Number 4, 1099 only. Now that wasn't mentioned in the video, but the thing about the 1099 only is it's for anyone who receives a 1099, but again, their income won't reflect well enough on their tax return. So this is great for real estate professionals, what I call the forgotten buyers and borrowers, because so many mortgage professionals are like, hey, realtor, send me your mortgage business, but realtors need some love too, right? So this is ideal for realtors, anyone who's on 100% commission and just receives a 1099. This can be used for primary residence, second home, vacation home, as well as investment properties. The next product is the ITIN, which stands for Individual Taxpayer Identification Number. Now, this is for folks who are not U.S. citizens, make money in the U.S., file income in the U.S., but we can't use traditional, we can't use a traditional social security number, et cetera. So what's great about this is you don't have to be a U.S. citizen, and it's better than the foreign national product. So this can be used for primary, second home, vacation home, or investment property. The next product is the foreign national product. Now this is for someone who is not a U.S. citizen, who doesn't have an ITIN number, and ultimately you can purchase or refinance, but it's for it's for second home or vacation homes or investment properties only. We can't do a primary residence for a foreign national. On a purchase, it's typically 30% down. On a refinance, whether you're doing a rate and term, paying off the existing mortgage, or doing a cash out refinance, it typically requires a little bit more equity left over as a result of the mortgage completion. But it gives foreign nationals the ability to leverage instead of using all of their cash. So foreign nationals, if you're out there, realtors, if you're out there watching, instead of a non-U.S. citizen paying cash, by leveraging, by getting a mortgage, right? If someone's buying a $500,000 home and at 30% down, it's a $350,000 mortgage. That means there's $350,000 in cash that they can use to acquire more real estate. You can actually do that with that same money. You can buy 2 more properties, right? And so now the foreign national is in, and this goes for all of these products, right? Especially on investment properties. Instead of paying cash, if you're leveraging, you can use that cash to acquire more real estate. So for the foreign national, basic documentation, essentially it's logic. We need to make sure as a lender that you can evidence income from your home country. Okay, another very popular product is a construction loan. Now, a construction loan has 2 forms of construction. One is if you are buying the land and you need money to build the dwelling, or even if it's a commercial property, this can be done for commercial as well, but the acquisition of the land and then money for construction from start to finish. And then this can also convert to a permanent loan, or it can be refinanced to a long-term loan, or it can be flipped for immediate sale. So construction loan, that's one version of it. The other version is some of you are people that you know already own the land, right? And so then you just need money for construction. Same thing is all the money gets allocated into an account, and then you use the money for construction, and then there's either a flip or a hold or whatever the case is. So that can be used for primary, second home, vacation home, investment properties, as well as commercial. And then a renovation loan. So a renovation loan, if you already own a home and there's no structural issues, like it's all cosmetic, that just might be a traditional cash out refinance. A renovation mortgage, essentially for most on a refinance, is if there's structural things that need to be done. For example, a roof wouldn't pass an appraisal because there's water damage, right? So you need to get a new roof or something like that. Or on a renovation on an investment property, if you want to renovate that property, or on a purchase, right? So on a purchase, if you're purchasing a home that needs work, a renovation mortgage is you're acquiring the property, and then as a lender, I'm setting you up to give you money to do the renovation. And then what happens after that is you can either flip it right away, because in some cases there's no prepayment penalty. You can hold on to it, and on the renovation, you're actually it's typically going to be a higher interest rate because it's typically going to be refinanced at some point, and that's how investors make their money on renovation. Is they put money on the market, you need to fix it up, and then typically what would happen with that on a high interest rate fix and hold, you get the renovation money, you complete it, and then you refinance to a lower interest rate longer term if you decide not to sell it. So with all that being said, I just want to remind you that if any mortgage product, whether it's primary, second home, vacation home, investment property, or commercial, if we can use your tax returns, ultimately that means that the interest rates are going to be a little bit lower. The amount of equity required, whether it's less down payment or less equity required after refinance, might be a little bit better if we can use tax returns. Reminder, this part of the video is designed to let you know lots of products that are out there to get money so you can do the things that you want to do to increase your money wellness situation without the need for tax returns. Let's continue on with the video. To let you know there's a lot of opportunity out there. What I'm seeing is a lot of investors are doing cash out refinances out of their existing properties and using that cash to leverage and purchase more. In this market, because there's so much opportunity, now's the time. For more information, if you or someone you know wants to reach out to me to see what I can do for you and or your clients or someone that you know, my contact information is below. Reach out, and I look forward to speaking with you soon.